Morning, it's Clarke from American Lithium. We own the Falciani Lithium project in Peru, a large claystone, actually the second largest claystone project in Nevada. And we also have one of the largest undeveloped uranium projects in Peru as well. Great to be here this morning, Matt.
Good to see you. Sorry, good to see you. And we should have caught up a couple of weeks ago, but I think we couldn't quite get the diaries working there. But probably no bad thing, actually, because since we've spoken, we've seen this kind of reset in the uranium market, and then a kind of price discovery again there. But the big news is obviously the House and the Senate in the US signing up on sanctions, and Mr. Biden putting pen to paper. What do you think that does for you?
Yeah, no. Well, listen. I think. I mean, obviously, on the two fronts, the whole EV side of things with tariffs coming, but obviously, the bigger news probably that internationally being the ban on Russian imports on the uranium side, and that's. I think that is. Both of them are huge. They obviously show the way the West is going. I think on the uranium side, it's very clear that the administration is getting more and more concerned about the supply of uranium, with Russia and China and a lot of other countries starting to look east that are in the supply chain. So, from my own discussions, with politicians and others, it's very clear that they're keen to see our assets in Peru, find their way into the North American supply chain. So, I think, Matt, that is great directly for us, and that, we regularly have those discussions in country and in Washington. But I think just in general, the tenor, obviously, globally, I think is probably going to be good for uranium prices and lithium. We've seen lithium start to bottom. It's going to be interesting because lithium, you've got a trade war right now between the Chinese suppliers of vehicles and the Western suppliers, and that's a really interesting lot.
It is. But I'm trying to work out how I as an investor play it, and maybe that's maybe I get some sense of that by working out how you play that market as well, because obviously you're in critical metals and critical minerals, the shape of lithium and uranium, but the equities have been beaten up really, really good. Lithium companies have all been absolutely abused of the last year. You've seen a little bit of recovery, I guess, in the last week or so. I mean, what do you think the kind of forecast for lithium investors is going forward?
Yeah, I mean, I think it's bottomed. I think we've seen that in the commodity. Took a while for that to come through into the stocks. I think we're starting to see that now. There is talk of a big short squeeze coming in the U.S. markets. Obviously a lot of the trading last year was shorting stocks against the kind of backdrop of the so-called falling demand in EVs. And yes, EVs perhaps sales didn't perhaps grow quite as much as people had forecast a year or two back, but they still went up nicely. And it looks like there's a really good bounce back this year in that. And I just think what you're ultimately seeing here, Matt, is there is going to be more and more support in the West for domestic supply. And whether it ends up being a two-tier lithium quote, which Benchmark and others have put forward, that you have a Western quote with an Eastern quote, if you like, and it just I think is underpinning what we're going to see here. I mean, the trade war is definitely going to drive more business for domestic suppliers and more interest in domestic supply. And I think overall that can only be good for companies like us. And we've seen that the US signing the Inflation Reduction Act, money from the DOE, DOD, and stuff like that. I think this is moving to a whole other level. When I was in Washington, there was conversation about initiatives, for example, where the US government and others might guarantee a base price in certain commodities, almost like an offtake. And obviously when that kind of thing happens, you know, people aren't building many new mines at current lithium prices. But if you're guaranteed a floor higher, same for cobalt, you know, same somewhat for nickel. So I think there's a lot happening, Matt. And I think, you know, I think it's going to really help, you know, companies like us with domestic supply, but also Peruvian supply that ultimately we think the US is, well, I know from discussions they absolutely want to see that supply chain.
Right. Okay. But, you know, I guess, you know, cliche, talk is cheap, right? So we're seeing lithium companies have been up real good. You know, investors have been, you know, lost a lot of money as a result. How do we differentiate as an investor? How do we differentiate between those who will and those who won't in terms of what their intent is, their ability to kind of get this thing moving over the line and kind of recover? Like this is not an advert for, you know, new investors. I'm talking about existing investors, right? What's there to give them hope as far as you're concerned about in terms of what you're doing?
Yeah, I mean, in terms of what we're doing, you know, I think, I mean, the sales pitch for us is on a combined basis of projects, top 3 in the world in terms of resource. You know, I think Claystone is the second biggest claystone behind Lithium Americas. It's right in Nevada. And then in Peru, Falciani is the third or fourth largest hard rock. And again, our difference that I've always seen, and yes, I think as the prices came off, people were more and more fixated on pegmatites and brines, which were the tried and tested approach to lithium production. And you know, for us, we have always focused on projects that don't need to go to China. We have projects that are conventional mining. Think of them more like gold or copper projects. They're easy to leach in terms of the recoveries you get. Obviously, I'm not trying to say lithium is an easy mineral because it's probably one of the hardest of all to recover and recover to battery grade. But both of our projects are conventional mining projects, so sulfuric acid leach. You engineer out the impurities, and at the back end, you have a high purity product that can be brought to battery grade on site without the need of China or any offshore. And I think as we move through this cycle, those are the projects that the DOE is funding. You're seeing that on the Claystone side. They're not going to fund a big pegmatite that has to then be shipped on a train to a ship and then go to China and refined and then back again. It just makes no sense. So I do think that this whole political landscape is going to have a positive impact on players in the West generally. But I also believe companies like us that can take out that refining step are even better placed.
No, absolutely. Because I think otherwise you're going to be at the behest of either the Chinese government or possible sanctions for product that has had, you know, Chinese input. And, you know, that we're seeing that in other commodities, and certainly the implied threat from the US government of that as well. But again, coming back to and I'll stick with the lithium side of your business for now, if I may. You know, the having like the North American and South American assets is great. You've got to be able to take advantage of this kind of change of, I guess, sentiment from the US government. They are putting money or making money available, but it seems to be all flowing downstream. So again, how do companies like yourself benefit? I know talking to US government departments and ambassadors and that sort of thing. But again, you know, they're talking at the moment. When do you think they can actually help make it easier for either people to invest into companies like yourself, or will they put their money up for grabs here? And, you know, what does a critical mineral list actually mean for companies like you right now?
Yeah, so right now we are, you know, with the DOE, there's obviously funding to build mines. There are actually other programs now that have been announced that are more grant focused. So, you know, we're obviously looking at all of those, and that would bring in significant funding. You know, that you would have to match it as you move down the line, but obviously if you have a chunk of the money you ultimately need to build a mine guaranteed, it obviously makes the process a lot easier. Inflation Reduction Act again, ultimately tax breaks for domestic suppliers of lithium will be big. But I think the other big thing that's coming, Matt, and this is what I was trying to allude to, is I do think you're also going to see the US government provide offtakes. I mean, lithium is now not just a critical mineral, it's a mineral of security as well. So they can stockpile those kind of minerals. And, I think there's some kind of approach coming, certainly, and I don't know exactly what minerals will be included, where the ability to underpin, look at lithium right now at 15,000 a ton roughly. So if they were prepared to come in and guarantee it at 20 to 25,000 a ton, that's obviously going to make a huge impact. And I think those kind of initiatives are coming. I don't know whether it'll be lithium first, or we'll see it. I would say cobalt is probably the most manipulated critical mineral. If you look at the Chinese, and certainly say lithium is highly manipulated. I think a lot of the price fall was certainly exacerbated by Chinese dominating the supply chains. And they've effectively given a real kickstart to their automotive industry, which is now, BYD is now the number one supplier of lithium autos in the world. And just in April, I think their growth was month over, was it, over the last year was something like 50%, and a huge chunk of that is exports. So they are really starting to flood the markets, and you're not going to see people step back. And then people talk, well, what about Trump? Well, Trump certainly isn't going to stand for that kind of thing going on. So, who knows which way the election will go. But I think, my view of the world is, I think the US in particular and other countries, and you've seen it as well as Europe with the Critical Minerals Act, there's a lot of people are awakening to the threat here. I mean, like if BYD start to dominate the world of auto sales, then companies like Mercedes, Volkswagen, GM, Ford, what are they going to do? And those are huge huge employers. So it's a really interesting one. I mean, I don't want to give the sense that our whole business plan is underpinned by what governments are going to do. I think lithium is back into its huge growth coming up here. I think we're going to, as we head through the middle of the decade and beyond, it's going to swing it back into a big deficit. So I think in general, it's good. But I think for companies like us, I think a lot of these initiatives are going to be really supportive as well.
Right. Okay. And so what's happening with lithium price at the moment? Because I think most people want to sort of see it and sort of settle in the kind of 30,000 range. But we're ways away from that, aren't we?
It went close to 12,000, which was a critical number because 12,000 was actually the top of the previous cycle. So it never actually dipped below the top of the previous cycle. And it's now seems to be pretty range bound in between, $14,500 to $15,500 a ton. On the lithium carbonate side, we've seen a bigger bounce on the spodumene side. I think that's up to about, $1,300 a ton now, something like that. But it's been, it's bottomed and it's moved nicely above that. And most commentators expect to see it continue to not necessarily power away, but continue to strengthen during the back half of this year before, as I say, we move through the mid part of the decade. A lot of commentators believe we're going to swing back to deficit, especially when you consider the projects that have been shut in or delayed by this price fall.
Well, if you're looking at your lithium projects alone, you're sitting at, 8 billion, which over 8 billion worth of NPV. You got it, and I don't know what what the pricing was in terms of all of the
20,000 in Nevada and 22.5 in Peru. But what I would point out is the up cost in Peru is $5,000 a ton, and we think we can get that lower. It's one of the lowest globally, and in Nevada it's about 7,500 a ton. So even at the current levels, you would make a reasonable return.
Right. And obviously, in an environment like this, you got to conserve cash. You got to, if the market's not reacting, it's kind of pointless. So, I think the general mood is a little bit up with lithium. Maybe we are at bottom. If that is the case in terms of what's the kind of first things you return to doing in terms of moving those projects forward? You've got two. Do you have to pick a favorite child?
I think Falciani is the favorite child right now because it is further ahead. If the political system, is solid in Peru, which it seems to be again, then the permitting process in Peru is ultimately significantly quicker than the US. And it's a project that, the Met side is more baked. So, I think what you'll see us focus on in the next few months in Peru is finishing things like the PFS, and looking at piloting as well. The flow sheet's quite where it's ready. So I think both of those are key factors. And if you remember, we filed our EIA early, which allowed us to drill last year. That process is ramping up as well. So moving that forward now helps us permit mines down the road. So again, speed up the whole permitting piece. So, we think there's real near-term traction with Falciani because of those timelines and where it's at. And again, its scale and scope and the fact that it produces a battery-grade product, I think, are all key features for it. And it's not to say that we don't like the clay stones. The clay stones are a different animal. They're obviously got a lot of impurities in them. But again, like Jonathan from Lithium America has always said, it's conventional sulfuric acid leach. And then you have to deal with a lot of impurities through engineering, which is why you see our op cost in Nevada at $7,500 and at Falciani $5,000. In pure terms, both again at conventional mining flow sheets like gold and copper produce high purity products. So, Falciani, I think, is poised to really rip. I think the clay stones, obviously, we saw Lithium Americas do a large raise at a very big discount, which probably didn't help Stone face in general. But I think as they move forward here, Matt, I think you're going to see them start to make some good progress on that build, which will then, come back through.
Okay, and let me just interrupt there, because I know we're both running out of time here with Kirsty today, and maybe we can come back to it a bit. But just if we can just finish off with on Makasani, we talked about spin outs and the timing of that, and because you'd have taken a market like this for uranium this time last year, but having sort of seen what the potential is. Perhaps a lot of companies are guilty of perhaps wanting to wait and see how this plays out over the rest of this year. I mean, where's your head at with the spin out?
No, I mean, we're committed to doing it. We just want to make sure we do it at the right time and in the best way possible. Obviously, uranium went up really nicely and had a bit of a pause, which was only a healthy and good thing. And obviously, with recent news on the bans from Russia and everything else, it's starting to move back up nicely again. And the long end of the curve has been continued to go, and that's the most important end, really. So we remain very, very positive on it. And we're very focused on that asset. Really, what we want to do, Matt, and we're trying to make sure we do all the pieces. It's not only a way to bring capital to American Lithium, but more importantly for our shareholders and the company, it's about unlocking the value in that asset. I mean, if that asset was trading in its own right now, it would certainly in the current markets would have a several $100 million market cap. Our market cap right now is 240 million in total. And, when you look at that, the conclusion you make is that we're not getting any value for the asset within us. So how do we best, bring a chunk of that value into American Lithium? And so, we're focused on it. We will do it. We're just going to make sure we do it at the right time and right structure and everything else. But yeah, no, that side of things looks really strong. We're excited.